Hello, welcome, and sorry. Welcome to Bitcoin, Maple Bitcoin Live. We are without Jor today, but we have a special guest, Sunny Poe. We're going to talk a little bit about borrowing money to buy Bitcoin. I know you have a strategy for doing so that I'm very curious to hear about, and maybe some of our listeners will be interested in. How are you guys doing today anyway?
Doing great. Doing
Very
great. Hey,
good.
by the way, I just wanted to mention we need Jor back to do those intros. Either you
He,
need to
he
practice
definitely
or
hits
we
it.
need Jor
Yeah.
back. I'm just kidding. Yeah, I'm doing okay. I'm doing well. It's been a good week so far. Just got to keep doing what we're doing. It's all the linear update, the linear inputs that give you that exponential output.
Yeah,
That's what we're working on.
absolutely. Cool.
Go
So
ahead,
where do you
Sunny.
guys want to
You're
start
about to
with this?
Oh, sorry. I think Sunny was about to say something before. I think I interrupted him.
I was just gonna say I watched your guys' show on YouTube weekly, and excited to be on it.
Awesome. Good to have you, man.
Yeah,
Yeah. So where do you guys want to start? I mean, the subject here is borrowing money to buy Bitcoin. The other thing I want to mention before we actually get into that is we will be answering questions about halfway through the show. So if anybody in the chat has questions, it helps if you say them in capitals so that I can actually see them and star them and we can get back to them. So that's halfway through the show. We'll start answering a lot more viewer questions.
yeah, and I can start and jump in with some very high level like focus points.
Let's
So
do it.
one,
Yeah.
so one being obviously not financial advice. I think it's important for everyone to understand that and to understand that everyone's finances are a little bit different, and so you can't just copy paste what you hear from people out there that are spreading their individual strategies. So that's one. So the second thing is the fundamentals of borrowing to buy assets is no different in Bitcoin than it is in real estate or just any other asset class, really. Right? This is a brand new asset class, and some of the same TradFi rules about borrowing still apply here, because you have to remember Canada and the US, we are debt-based economies, and the whole fundamental thesis of a debt-based economy is you pull forward purchasing power, not purchasing power, you pull forward productivity and GDP and all these things that the government does. So as an individual, you also need to be looking forward to pulling forward assets to the present, and really that's how traditionally wealth has been built. So coming back to Bitcoin now, what I've been doing for about a year and a half now, November 2023, is really just trying to pull forward all of the Bitcoin that I could from just my regular DCAing, and just to bring it to the present, because we know Bitcoin goes up over time. So it's better to have more today than it is tomorrow. So that's the fundamental reason here that we're discussing.
Right. So you're acquiring Bitcoin today using future capital that you plan to acquire over time, bringing that capital to the present, basically through debt. Which, yeah, like you said, is the way that a lot, like the financial system that we're all in here has worked, right? Like that's what real estate people do, right? They
Exactly.
buy an asset, they use future capital to do so, and they hope that asset appreciates over time. The difference being here is there's no maintenance cost with Bitcoin, and the price or the purchasing power of Bitcoin increases rapidly over time compared to the fiat that you've used and the debt that you've acquired. So maybe we can go a little bit deeper into there. Rajat, do you have any additional points there as well?
Yeah, I think from the strategy. So I've been following your strategy for a while now, Sunny. I know what you're doing. You've been making up
Mhm.
monthly updates, and I'm a huge fan of it. I think obviously it depends on the timing. It depends on when you do it. If you do it at the right time, like let's say we go into a 80% bear market, and you go and borrow against your Bitcoin, I think that's, or sorry, you borrow money to buy Bitcoin, you use 0% credit card transfers, the balance transfers that you're using. If you do all of that, then that's really great and that's really smart. But I think one of the difficult things for people to understand here is that if you do it at the wrong time, I mean, there's really no wrong time to buy Bitcoin and to get as much of it as you can. But what I mean by wrong time is, let's say you borrow money, you have a year's term to pay it back, and then after that, the interest rate goes to 20%. If you borrow money at the top and then you buy as much Bitcoin as you can, you're gonna not only lose money on the Bitcoin in the short term, but also you're gonna have to pay the interest on the loan. So when you borrow money, that's very key, right? For people who are watching today, maybe right now may not be the smartest time to borrow money to buy Bitcoin. But I mean, there's different perspectives that you have to look at this from. What if we never have those same kinds of bear markets again? What if we never have that 70-80% bear market? And I think you're one of the people who actually talks about this a lot. The most painful thing for a lot of people will be Bitcoin just grinding up slowly and
Slow and
just going
steady
up
is
forever.
max pain.
That would be
Yeah.
extremely painful, because what people are thinking is
Yep.
they're gonna sell their Bitcoin. They're gonna sell their Bitcoin at the top, and then when Bitcoin drops, they're gonna buy back in, and then they're gonna sell their Bitcoin at the top. You would be. It's crazy how many people are saying that, and they think that they're not part of the majority.
Yeah,
Everybody
and
thinks that. Everybody wants to do that, right? So your strategy works really well if you, depending on what people are going to do. I think the strategy was really great because you got in at the very. I think you got in near the very bottom, right?
no, not at all. The very bottom was 16. I got in at 37.
37. Oh, so you were. It was double above. It was double from the more
The
than double
bottom,
from the bottom. That's
more than double from
crazy.
the bottom. Yeah.
So would you say that this, if somebody were to implement the strategy now,
Hmm.
you think that would be smart?
I get asked this every single day. So what I typically say is, you have to do it at a level that is comfortable to you and that makes sense at a scale, like a small scale. Nobody should be doing what I did. I went all in, every single card I could find at 37. Okay. Why? Because there was an upcoming catalyst. The ETF hadn't been approved back then. I knew that was going to be approved, and that was a bet. I was making a bet that it was going to get approved.
Right.
What catalyst do we have in the future right now? Nothing as big as the ETF, in my opinion. Like I said, we've got slow and steady buying. We've got the ETFs buying daily, and then you have our White House just tweeting every now and then about crypto, and we have some crypto bills in the works, stuff like that. Nothing too major, in my opinion. But to come back, when someone asks me, should I do this now at 120K? I typically start with, just try to borrow the cheapest debt possible. You don't want to like borrow against your Bitcoin, because that's typically not cheap right now. The best I'm seeing is like 8, 9, 10%, right, against Bitcoin. The cheapest credit that we have in the West is going to be credit card debt, and it's going to be specifically the 0% deals that you find. I'm not saying you just go buy it on your credit card that has a normal 25% credit on it. You have to look out for these 0% deals that are everywhere, honestly, if you just Google. And not everyone can also do this. You have to really have a high credit score. There's a reason the rich get richer, because the rich have pristine credit and they're able to borrow more and more and more. No different here in Bitcoin. If you have pristine credit, I'm talking 800 plus, you're going to have access to all of this credit card debt that personal consumers can get. And that's what I've been using. And they typically have 18 to 21 months that it stays at zero. So that's mainly my strategy there.
So are these like balance transfer deals and things like that you're looking for?
Exactly. They are. Some
And so-
cards have 0% on purchases. Some cards have it only on balance transfers, and some cards have both.
Okay. And then so right there's sort of the term, right? Like when you're evaluating debt, there's a lot of different metrics you want to look at. And a lot of it is just the caveats that come along with it, not just the percentage rate, right? That's one metric. So you just mentioned there, a lot of these terms are, 12 to 18 months before you need to before either like those credit card interest rates will likely go to whatever the sort of average rate is,
Correct. Yeah.
which is, say 20%, right? That's really, really high. So that's when that comes due. Once you hit that 12 or 18 months, what's your strategy then? Like, do you find another? Like, do you just keep moving it down these?
Exactly. So that is called balance transfers, and that is what I tell
Right.
people who ask me if they should start this now. I say, don't do 8 cards like I did. Do one. When you max one card, your credit score really doesn't drop that much,
Interesting.
right? And you will have the ability or a high chance of just getting a new one, and then you just roll the balance. People do this in options all the time. They just keep rolling options, right? They don't close them out. It's kind of the same concept. You just keep rolling them for as long as you can get approved.
Right.
And this is all in the planning phase too. You have to plan meticulously for all of this, and you have to have backup plans. What if you cannot get a new credit card? For me, in my specific case, my entire family is on this plan, and they know what I'm doing, and they really understand. They don't understand Bitcoin, that's for sure, but they do understand buying unprintable things with printed money. That's what they do understand. So when I explained it that way, they were on board to keep getting new cards and rolling it over, and then me just maintaining the payments on that.
And I think the key here is you have to plan this out. You can't just do it because you feel like doing it. You can't
Correct.
just say,
You cannot.
You can't like like when Bitcoin goes to, like a few days ago, Bitcoin was at 123K. Some people probably would have been like, oh, I need to make up for all the gains that I lost out on. Now I need to take on leverage. I'm going to borrow against 15 credit cards. I'm going to borrow as much money as I can. I'm going to buy Bitcoin with it. Like that's a recipe for disaster. If you're doing it specifically because you want to make up for the gains and you're chasing losses, you're gambling. That's the key here.
Absolutely.
You're gambling. If you think that Bitcoin is going to outperform for the next, let's say so let's say you buy Bitcoin because you think the end of the year Bitcoin is going to be at 500K, and you need that bet to pay off. If it doesn't pay off, then you're screwed. Like, you take on a 1-year loan, like you borrow against your Bitcoin, you buy Bitcoin with it, you take on a leveraged position, and then you go and you buy as much Bitcoin as you can. So you expect that by the end of this year, Bitcoin is going to be at this price. You're going to be able to pay off your loan. You're gambling. Don't think of it that way. I think one of the good things about you is that you still have a great income.
Yeah. That's a very key to doing this. You need to be able to service debt. That is one major factor that cannot be overlooked. You have to have a stable income to be able to service debt.
You still have to make minimum payments, right?
Correct. You have to make minimum payments. Because the rate is 0, there's no need to make anything more than the minimum, because the interest is 0 anyways. You're simply overpaying for no reason.
Yes. So we just make the minimum payment. And then somebody asked, this is a comment that was highlighted. You're also paying a 4% balance transfer fee.
That's right.
I think this goes into more of like what you were saying before, Sonny, where you have to plan this out, right? That would be part of your equation, right? You would look at the balance transfer fees and all the other things associated with it. Is that,
Yep. There's generally a 3 to 5% fee. It could be 3, it could be 4, sometimes it's 5. And that all depends on like your relationship with the bank. Like I'm a long time Wells Fargo customer since like 2011. So the debt I get from them, the cards I get are usually 3%. So it just varies. But yeah, all of them are typically 3 to 5%. There truly is no free money, right? Because the bank needs to make their cut, because they're not making interest, right? For the 18 months. So all they're doing is taking their 3% fee upfront.
Right. Yeah, I like this strategy. I like this strategy a lot, and it is based on these are character loans, right? Like you said, you have a relationship with Wells Fargo,
Correct.
and your credit score is going to be part of this. Your relationship with the bank. Maybe they can look at other additional information. That's all going to be key to being able to get one of these. But what I like most about it is it is a character-based loan, so it doesn't mean that it's actually secured by anything that they can take from you. Obviously, you want to be able to pay your loan, right? And that's, it almost sounds like having that stable income is almost like first to pay the minimum, but also to have like that's like your backstop. Like that's to protect yourself in case you didn't time this correctly and the Bitcoin isn't appreciated when it's come due and you're not able to refinance, and like worst case scenario, you can still cover this until it does recover just by having that stable income to pay that loan. But you're not at risk of them just liquidating you from a margin call or something like that, right?
Yeah, and you just covered the two most favorite parts of this for me. There's no liquidation risk and there's no margin call risk on this. And everyone who borrows against their Bitcoin has liquidation and margin call risk. I don't with this strategy. Bitcoin can drop 80%, nothing happens. They just want their monthly payments, and I just hold the Bitcoin.
Right. Yeah.
It's basically free money for them. Why would they
Correct,
care?
correct.
They don't care.
They made 3%.
Yeah.
And that's all they care about. They don't care about my Bitcoin. They don't care about any collateral.
Yeah.
And I got Bitcoin and I get 18 months of time. That's the exchange.
And they printed this money out of thin air. So they literally literally got 3% up front. You gave them 3% for just, you basically like gave them a bribe. Hey, I'm going to give you this 3%, give me free money. And they're not going to charge you interest. It's that it's somebody mentioned, I'm concerned about the security aspects of giving up control of my BTC and the financier going bust and taking my coinage. So that was one of the the comments that you highlighted there for us.
There we go.
Great. Yeah, that's so important. The concern there is that if you have a loan against your Bitcoin, then you have to give somebody else your Bitcoin. But in your case, you still have the Bitcoin. You have it in cold storage.
Exactly.
So you have it in cold storage. You timed it right. Not even timed it right. I think you kind of predicted.
You don't have to time it right. The reason I did it was to front run the ETF. You have to have some reason, some catalyst that you are making a bet on. I don't think you can just do this blindly.
Yeah, that's key. Yeah. You can't just do it blindly. If you do it blindly, if you go in without a plan, then what is it? If you fail to plan, you plan to fail. Is that what it is?
Yeah.
Right? And I think that's what's happening here. Like if you had done it now, think about how much you'd be just worried.
Yeah, right now it would just be a huge gamble because I don't know if we're going to grind higher slowly. I don't know if we're going to go to 130 and go back to 100. I don't know if we're going to rocket to 200. There's 3 scenarios here that can happen, and
or we just go sideways. Like whales keep selling. That's one thing that people are they forget about. There's also the fact that there are a lot of whales who are selling their Bitcoin. People think, oh, Bitcoin's being manipulated. The legacy financial system is keeping Bitcoin's price down. It's being suppressed. They make money by Bitcoin's price going up. Like they make more money in fees if Bitcoin's price goes up. So they don't care about the price being suppressed. If the whales who have had Bitcoin for years, over a decade, if they bought Bitcoin for 10 cents, they're selling now for $100,000. To them, that's a great deal.
Exactly.
So that's something that a lot of people seem to forget. The people who are buying today, they think, okay, people aren't going to be selling their Bitcoin. That's not happening. That can't be happening. It's paper Bitcoin. It's not paper Bitcoin. Coinbase isn't trying to screw you over. They're not trying to screw themselves over. Like they don't care about how much Bitcoin you have. All they care about is maintaining their business and keeping their business running so that they can keep generating fees. They make more money from shitcoins than they do from Bitcoin.
Mm-hmm. Yeah, that's
they want to keep their exchange running, and they don't care about giving out paper Bitcoin because they're making way too much money from shitcoin fees.
Mm-hmm. Yeah, I will say a note there on the OGs selling. I mean, those OGs have such like proof of what Bitcoin can do, how much of a store of value it is. So it's even though it's likely, that they're gonna, sell some coins to improve their life and stuff. I'd be surprised if they didn't have the most conviction of Bitcoin out of anybody because they've seen the evidence of what it can do, right? So they're not going to sell it all, is what I'm kind of alluding to. I'd be really surprised if OGs really sold all their Bitcoin, but of course they're going to sell a portion of the stack because it really doesn't matter to them if it's 120 or 100K, right? They mined it in early days or bought it early days, and it's just unbelievable percentage up, right? So yeah.
What I'm wondering is why OGs are not borrowing against their Bitcoin. They have such low LTV that they can achieve, and still like, you know, spend some and buy a nice house or car or whatever upgrade they want to do. Like they're able to do like 1%, 2% LTV, never get liquidated, and never sell their Bitcoin.
Yeah, it's a good question, and I imagine there probably are some that do. Yeah, I mean, it does seem like we're at this point with Bitcoin where, and sort of the infrastructure that's being built around it, where it doesn't really necessarily make that much sense to sell it. Like there is this arbitrage you can do with borrowing at this point.
Yeah.
So maybe they're just like, well, I don't really know about any of that stuff. I'm just going to sell, just, cut a few off the top, and I have so many it doesn't matter. Maybe, I don't know.
True.
But
And if everyone decides to just borrow, the price will just shoot up.
yeah,
Because then where's the buying coming from all the ETFs? Somebody's got to sell.
yeah,
Or price has to go up.
yeah. Price has to bring out the new sellers, right? That's the only variable right there. Yeah. I did have there's this one question here that I kind of wanted to get your guys' opinion on. I'm going to read it out and maybe talk a little bit about it. It's I'd prefer safer option to just lock in a 10% with Strife. That's MSTR's perpetual preferred offering that pays an effective yield around 10%, and arbitrage the HELOC 5 to 6% rate. Already plenty exposure to MSTR elsewhere. No need to risk the castle as well. What do you think about this type of strategy of just doing sort of a carry trade if you can get a lower interest rate and getting something that might have some downside protection, like some of the products that MSTR has, but some exposure to Bitcoin's price action? Have you thought about this much, Sonny?
Yeah, so this is just a simple arbitrage trade where you just find higher return and then you put up like a lower cost of debt. Yeah, so I know MicroStrategy has these three products right on the market, and I haven't looked much, about that. But again, to me, the prize is Bitcoin, holding Bitcoin. To me, the prize is not cash flow or make more dollars. To me, the goal is holding cold storage Bitcoin. So for that reason, I did what I did with buying Bitcoin and not, using one of the derivatives.
Makes sense. Yeah. So that would be a compromise for you to use one of these derivatives instead. Yeah.
Right.
Yeah.
If you wanted cash flow, I think that question there is a good choice for a safe bet on generating cash flow. But to me, like I said, I work, so I don't need cash flow. I'm interested in asset accumulation. So Bitcoin.
Yeah. Makes a lot of sense.
Yeah, one of the things that so the thing that you highlighted there, I think one of the things that you need to consider is that you have to keep so if you do that, if you borrow against your Bitcoin and then you buy STRF, what Sunny was saying there, you don't actually hold the Bitcoin, you're giving the Bitcoin away, and then you hold an asset that you also don't own because it's on exchange. So it could be safer, but it could also be way less safe because now you're giving away your self sovereignty. Like you're giving away your wealth, and then you're taking on that HELOC risk. Where what if? How do you know that your bank may not call that loan?
Yeah, they're also
There seems to be like three counterparties here on that trade.
Yeah,
Like you've got
like
the bank, you've got whoever's holding your Bitcoin,
yeah,
you've got and then MicroStrategy, which I don't even know the counterparties the risk there, but because I don't hold
Coinbase,
MicroStrategy shares.
yeah, Coinbase,
Mm-hmm.
because counterpart whoever MicroStrategy is holding their Bitcoin with. So you're adding all these counterparties to get an extra 4%, but you're feeding the fiat system by borrowing at 5 to 6%. So you're giving your bank 5 to 6% interest, and you're taking on a riskier. So I think that's a little bit more risky than what you're doing.
I
That's what I
agree.
would say. I think
Could
that's
be.
actually
It
more
could
risky.
be. It's just prioritizing cash flow versus prioritizing asset accumulation. to
Yeah,
me.
like if you're actually, I had this question in my community yesterday. If you're younger, then should you focus on getting MSTY? I don't think so. Like
No.
if it depending on when you want, even if you want to retire tomorrow, I don't think it's smart to buy MSTY for that reason. Bitcoin will
That's
most
it's
likely.
part of the fiat mindset, Rajat. Like
Yes.
people want something for nothing.
Yeah.
A lot of people just want something for nothing. This
That's it. That's so
includes cash
important.
flow, and this includes every cash flow product like
Yeah.
MSTY. Everyone just wants to park some money and do nothing and get a yield.
Yeah.
And
Yeah,
some of these
we're
products might work out really nicely. You might outperform really nicely, but again, it just comes down to the fundamental reason of why you're doing it and what your goal is. My goal is accumulate Bitcoin. It's not to generate cash flow. And some other people, know they don't work, then they have a need for cash flow, which is fine. So it's to each their own.
Yeah,
yeah,
that's the key.
there's compromises with that too, right? Like cash flow has to come from somewhere. And if you look at the performance of MSTY, it's underperformed MSTR because it's harvesting the volatility, and there's consequence to that. So the total return is less, which is, people. Yeah, I think you're right, Sonny. It is a fiat mindset where people value like the cash flow now, and they just kind of want an asset where they can park it and forget it. But there's consequence to that. There's no free ride anywhere.
I think even with Bitcoin, you can't really park it and forget about it, because if something like quantum computing happens and you just have it set aside, you're on vacation somewhere, you don't care about your Bitcoin, you're somewhere, and quantum computing gets extremely powerful and you miss out on all of it. Like people can just a year can go by pretty easily, pretty quickly, right? So even with Bitcoin, I don't think you can set it and forget it. I think you do still need to pay attention to what's happening with the market. It's like you said, you can't get something for nothing. Even with Bitcoin, you have to deal with the volatility. That's
Mhm.
something. That's risk for people. That's very, very painful. That emotional trauma that you're going to go through during a bear market, man, like that's going to stick to you for the rest of your life.
Yeah,
Are
yeah.
you
It can be
okay with that,
brutal,
right?
especially if you're just watching every day.
Yeah.
Yeah.
Like, and people say, "Oh, this guy got Bitcoin at 10 cents and now he's a multi-billionaire, must be so nice." No, he went through seven bear market or like four bear markets of 70% drops. You can't go through that. Most people would either sell the first time at 10x's,
Hmm.
or they would sell when it drops 90%, right? Or then they would sell when it 10x's again, or they would sell when it drops 50%. Like they wouldn't get to that point where they have $1 billion worth of Bitcoin.
Yeah,
That's the
yeah.
thing that
Most
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 people.
people would rather deal with tenant problems on their real estate than go through
Yes,
70% drawdowns.
Not me.
absolutely.
Not me, that's for damn sure.
Yeah.
um yeah, I think you're right. There's nothing you can really leave and forget, but I think the closest thing we have is Bitcoin
Yeah.
in self storage. And even the quantum threat, it's if you keep your Bitcoin in a wallet that you've never sent Bitcoin out of, there's no private public key, quantum risk there. So even that is
Oh, I didn't know that.
overblown. Yeah.
Wow.
So you actually need to have sent a transaction out of that wallet for there to be a correlation for quantum to be able to uh,
Oh, to figure
break
out what the
the
private key would be.
exactly,
What if you've
exactly.
consolidated just within your own wallet? Does that count
If you've
as
sent it to a new
transaction?
address, if you've consolidated to a new address that
Mhm.
hasn't been used before, then you're fine.
Oh, okay, okay.
If you
Yeah.
consolidate to a new address within your same wallet.
Yes. Yeah,
Oh,
so
interesting.
so it's like it's best practice, right? All the wallets now just generate a new receiving address anytime if you're sending yourself
Mhm.
Bitcoin or anything like that. So that already has protected you against the private public key quantum risk. There's additional quantum risks, but those are much less likely. Um, and again, totally theoretical at this point. Like there isn't any real evidence that this is coming anytime soon, right? It's all science in the work. But
Yeah.
yeah, that's my understanding of it, at least.
I think even gold, you can't really set it and forget it, because the people who bought gold and just forgot about it and they buried it in the ground, now they're actually now Bitcoin is a true threat as a store of value. Like that gold may lose value for a very long time, and that's not the greatest set it and forget it strategy.
Yeah, I mean, atomically, you can set it and forget it, right? It's not going to
Yeah,
rust,
if you
but
want gold, like
yeah,
that gold's like, but what's that gold gonna be worth? I think that's the problem, right? If right now, think
100%.
about how many people just have gold sitting in their vaults. They're not actually using it. They're not doing anything with it. So all that gold is set aside as a store of value, and because of that, the price has gone up. But as more people figure out the difference between gold and Bitcoin, or they see the trend that gold is trending to zero against Bitcoin, they're going to want to sell. And then those people, like it's like you said, atomically you can keep it. You actually have that gold, but what's that gold going to be worth if you're using it as a store of value? It may be too risky.
Yeah. Yeah, and gold is, I mean, very highly likely that it's going to be demonetized, in my opinion, because of Bitcoin.
Yeah.
Also, there is a comment saying that I was wrong about the wallet address with Quantum, so maybe
Oh.
look further into that. I'm not sure if they're right or if I'm wrong or what, but that was my understanding of it. But maybe something else to look into.
Okay, amazing. Yeah, that was really valuable. I actually I want to look more into the quantum computing just because
Yeah,
I didn't know that that's how it works. I wanted to take a quick break here if you guys are okay with that. And just want to mention to everybody, leave a thumbs up. Really helps with our stream. It really helps with YouTube pushing our content to more people. Um, if you found value here so far, I think we've talked about some pretty niche topics that people haven't really talked about in other conversations. Leave a thumbs up. It's free for you. Really helps us. I would
yeah.
appreciate it.
And also, if you want to donate to the show, you can do so by scanning the QR code next to Sunny, and also you can type in the our Lightning wallet address if you wanted to send some Lightning or some Lightning Bitcoin our way. Um, if you've gotten value from the show, basically,
Yeah.
appreciate it very much.
Awesome.
All
And
right.
one quick thing that I want to mention here: if you're looking for more content, if you want to join us on we're going to do private live sessions. We have a community where people ask their own questions. They talk about whatever they want to. We have extra content, just exclusive stuff that's not available on YouTube. If you want to, you can join our community, the Maple Bitcoin community on School. Go ahead and join that. It's $27 a month right now. You can try it out, see if you like it. If you don't like it, that's perfectly fine. Um, yeah, try it out.
Yeah, and I also am going to share a link here to Sunny's Twitter. You know,
Awesome.
it's really great to have you on the show. Your insights here have been really helpful, and
Mhm.
your Twitter is what you use most. Is that right?
Yeah, that's right. That's
Yeah.
right. I'm
Okay.
only on there.
Okay. Yeah. So everybody go definitely follow him. Check out his content. I mean, actually, I kind of wanted to talk about this one thing here that you mentioned where
Mhm.
um, there was a lot of interest. You know, when Bitcoin first hit 100K, everyone was saying, "Oh, we're going to blast past this. This is, price discovery. Everybody's going to like retail is going to come in. 100K is a huge milestone, which it is. But I think you've been making these tweets that I thought were really well put. Of how, you know, basically you were saying something along the lines of real estate in New York is really expensive and retail doesn't care either. So what what I guess, yeah, just can you explain some of that a little bit, and maybe we can talk about that.
Yeah. The high level of that is, I think retail doesn't care about wealth building in slow motion. Anything that gets you rich, nobody likes getting rich slow. There's a reason why it's called get rich quick. Like anything that happens in slow motion, retail is not interested in my opinion, because it's hard to notice it. It's, like you don't get excited about it. Like
It's boring.
it's exactly, it is boring. Like nobody has noticed Berkshire Hathaway for 2 decades go all the
Yeah.
way up to 700K. It
Yeah.
was once 100K as well, the Berkshire Class A shares. Nobody talked about it, but now it's
Yeah.
at 800 almost.
I remember when I was in university, it was at like three, maybe what 250 or something like that. Oh, I'm actually looking at the calendar. When I was in university, it was at 119K. And nobody talked about it.
Yeah, see, because it's boring. Like it's not
Crazy.
going to go up 100K in a year,
Yeah.
but over 20 years, I mean, it'll go up a lot. So that was kind of my framing around why I was saying like retail really isn't going to come in my opinion, at 100K. They didn't.
Mm-hmm.
You look at every single metric, the any retail metric, it's down. I don't think they come in at 2 or 5 or a million. It's someday it's gonna just get passive buying, like a S&P 500 index fund or something, where all of retail will just have it just because they work a normal job and they have a 401k and they buy Bitcoin. But other than that, I think proactive interest from retail into Bitcoin, I think, is done. It's never going to be like it was in 18 or 21, if you remember those times, where everyone, your grandma, Uber drivers, taxi drivers were talking about it. We don't have
That's
that
one
now.
of the I think that's one of the crazy things, right? That volatility brings in retail because they see that it's down 70%. So now they're getting a great deal, right? And they like that. They like the fact that they got that great deal, 70, 80%, whatever the drop ends up being. They like that volatility because it feels like it makes them think like, "Oh, I'm getting a good deal on this. So I'm going to buy as much as I can." And then as soon as the price, so it goes down 70% and then it starts coming back up and they start losing interest again because it's grinding up slowly. And now they think, oh, it was down 70% not too long ago. Why can't I get it when it is down 70% again? Why am I going to pay double the bottom price? Like most retail, like what you did, you used credit cards to buy as much Bitcoin as you can when it was at 37K. Most retail at that point would be like, no, I'm going to wait until it goes back down to 10K. It's still on a downtrend.
At 37, nobody was interested. This was November
Yeah.
2023. Nobody was talking about Bitcoin.
Yeah. Like even now, when I talk to people, they whenever I tell people to buy some Bitcoin, they say, "No, I'm going to wait until it falls." The only person who actually bought Bitcoin because I told them to was my wife, and she keeps buying consistently because I keep telling her to. And now she's like just automated it. She's doing it herself. I also did this for her sister. I just one day she had some extra cash on her phone, and I told her go buy Bitcoin, like on her Wealth Simple app. I told her go buy Bitcoin, and she's like, no, I want to wait until it falls. And I said, no, give me your phone. I'm going to buy it for you right now. And at the time, keep in mind, right now, Bitcoin is at 165K Canadian, 160K Canadian, whatever the number is. At the time, Bitcoin was at 65K Canadian. So she was saying at that time, I'm not going to buy at the all-time high. Because at the time, it was near the all-time high. It was nearly at the very highs of 2024, I think it was. And now it's more than doubled. And she says, I wish I had bought more.
Yeah,
A
I
lot of
know.
people say that, like
Yeah.
now at all-time high. You hear that,
Yeah.
you see that comment like everywhere in
Always.
your post, Rajat. Like,
Always.
you shouldn't be doing it now at the all-time high.
Yeah.
Every price was an all-time high.
Yeah.
Just if you zoom out, every price was an all-time high.
Yeah.
That word doesn't even make sense on things like for Bitcoin and where time is infinite.
Yeah.
Like there is no high. It's just moves forever upward.
And another thing here is that when Bitcoin's price goes to an all-time high, it doesn't stay there. It always comes back like 95%, 99% of the time it's below the all-time high. Right? So
Right, yeah.
people like the fact that it's at the all-time high and they hype up the buys, and then as soon as it falls from there, they start saying, "Oh, it's crashing, it's crashing." Like I would get comments from people who would say Bitcoin went from 111K to 75K, it's crashed, or 110K to like 90K, it's down so much. Why would I want to buy this thing? But it went from 0 to 90K. Zoom out. 0 to 75K, even 0 to even if it drops to 50K today, it went from 0 to 50K. Zoom out. The next 50K is going to be so much easier than the first 50K. Then the following 50K is going to take so much less time. Like I actually think, the way that I see it, I think that it'll take less time for Bitcoin to hit $10 million. Actually, give me your thoughts on this. I don't know what you think of this either, for. So I think it'll take less time for Bitcoin to go from 120K to $10 million than it took for Bitcoin to go from 0 to 120K. So the
So it
next
took
15 years.
it took 15, 16 years to get here. And you think it's going to get to 10? Wait, what did you say? How much?
I think within the next 15 years it could hit $10 million. Right?
Yeah.
So from here that's like a 80x, is that what it is? 70x?
I mean, at what? Yeah, I guess the question that always comes to my mind with these really high numbers is what is the dollar worth at that point? The dollar's got
that
to be worth
implies a
almost
lot of
nothing.
things about the dollar
Yeah.
specifically.
Yeah, but people don't think of it that way. People just they don't care about that. They don't care what the dollar can actually buy. They see that gold has gone up. Do they ask what can gold actually buy? They don't care about that. They care about the price. And that's what they're going to miss out on. Like even if so in that time, let's say in the next 15 years, Bitcoin 83x's. I'm not saying it's going to happen. I'm just saying in this hypothetical. If it 83x's and then you have inflation at 5%, let me actually run the numbers here. So if you have inflation at 5% over the next 15 years, can I share? Maybe I'll share my screen here.
Yeah, go ahead.
Just so people can see what I'm talking about. If you have inflation at 5%, I'm going to share my screen. Okay, there you go. So what I want you to focus on here is this is a spreadsheet that I made where I just did a linear growth for Bitcoin, but the thing that I want to focus on here is the expenses. So if your expenses right now are at $5,000 a month, inflation is 5%. What that would mean is, and I think 5% inflation is pretty high. What do you guys think? Do you guys think that that's conservative? Like, would you say that that's a good estimate
5% inflation of the dollar?
of your costs?
Oh,
So your
Per,
costs
per year, you mean?
Sorry,
Per year, right?
per year.
Yeah, I think that's low. I think
I think
in
that's
Yeah.
reality it's more.
Oh, you think that's low? Okay. Well, what do you think
Yeah.
it could be? Let's 7%.
I think we're between 7 and 10.
Okay, let's go
Yeah.
10. Let's go 10. Okay, so we'll go at the very highest. So if your expenses grow at 10% per year, your first year it's going to be 60,000, then it's going to go to 66. By 2031, it'll be at 106,000. By 2036, so actually by 2030 it'll be at 96. 2035 it'll be at 155. 2040, so that's 15 years from now, it's at 250K.
Mhm.
And that's with 7%. So your expenses would have risen at what, 4x? Is that what it is? 4x? 240 AF, a little bit
Where
more
did
than
we start?
4x.
Yeah. Yeah.
Yeah, your expenses would have risen at 4x, but your Bitcoin, and keep in mind this is with 10%. So your
Mhm.
expenses would have risen at 4x, 4.2x, but your Bitcoin would have grown at 83 times.
So what's the Bitcoin price at that
10
2040?
million.
10 million. Okay.
Like based on that same example.
Yeah.
You guys were asking what is it worth? Right? What is it worth at that point? It's still worth 20 times more.
What is the CAGR of it getting to 10 million at 2040?
Oh, actually I have it already.
Yeah, perfect.
It's 35%.
35%. Okay. Yeah, it's not unreasonable. I just there's a few different variables. It's like, where does that money come from? Is it new money through debt creation, the debasement that we see, or is it taking from all of the other assets out there? Because the market cap of Bitcoin ends up being quite significant in dollar terms at that point.
Yeah.
It's a combination of both. Both things are going to happen at the same time.
Of course.
I think the debasement is already accounted for in the inflation.
Debasement, yes, right. I mean, that is the cause of the inflation.
I think the rest of it will come from other assets. Like we have, so for example, we were talking about Strife before. Strife is almost like I think it was Jesse Myers that has it. So it was Jesse Myers that has a graphic up where he has like a pipe, where it's basically like Michael Saylor is attracting wealth from the $300 trillion bond market into Bitcoin.
Mm-hmm.
And then Bitcoin's price is set at the margin. Right. So the people who have Bitcoin already, they'll have to sell fewer and fewer Bitcoin to pay for their expenses. So less Bitcoin will be available. I think 35% per year is definitely possible.
I do too. Yeah, we've already seen.
I don't even think we're being moon boys there. I don't think we're like making some crazy. What do you think, Sunny? Actually, maybe you're the most conservative one here. Do you think that's possible?
Yeah, it is Bitcoin, so anything is possible. But generally,
what do you think is realistic?
super conservative on price targets.
What do you
Very
think would be
conservative.
realistic in this case?
By 2040? By
Like a
2040?
percentage growth.
So what are we at in your numbers? 35?
35%.
I think we'll be between 20 and 30.
Okay, let's go 25.
Steady.
So at 25% by 2040, it'll be 3.3 million,
Easily. That's easy. That's very easy.
right?
Yeah. That's
Like, I
very
think
easy.
see if
That's
that's
worst
very
case
easy.
right there. That's worst case scenario.
That's like the bear case. I would even let's even go with 20% just to make it even more bearish. 20%. So 20%, it'll be a 1.8 million.
Yeah, the way debt's expanding and the way we're spending, these are like all but certain. These numbers.
Like this number, I think I would be shocked if it's this low.
Me too.
Right?
I would be as well.
But mathematically, I don't think it can happen because of how much we're going to expand debt and how much Bitcoin is going to suck in other assets.
Yes,
Other asset
so I think
values.
that attracting other assets is the key, because we're going to have a lot of real estate people who don't want to hold real estate anymore, right? I've had conversations with people, so I do one-on-one meetings with a lot of people who are a lot of like physicians for some reason. I don't know why. Maybe because the rates are a little higher, so they're the ones who are willing to pay. But I spoke to somebody who had 15 rental properties. He sold 10 of them for Bitcoin after talking to me. So that's
Wow.
10 properties. That's 10 properties that got added to the market. And that's he bought, I don't know how much Bitcoin he bought. I think he bought like 25 or 30 Bitcoin or something crazy like that. But he bought that Bitcoin, he took it out of circulation, and he plans to never sell because he's making a really great income. Right? And how many people are going to do this in the future? Do you think people are going to want to hold on to their rental properties? I don't think so.
No, I don't think so.
Like
No,
right
no
now,
way.
I was talking to somebody who's a financial advisor at a big bank in Canada. He has a client who has like 9,500 acres of land somewhere in I think it's near Niagara Falls, and he's literally just holding it because he wants to borrow against it. He wants to borrow small amounts against it, and then he's going to keep borrowing against it until he passes away, and he's going to pass it on to his kids. He has to deal with all the legal stuff that he has to deal with. He has to deal with all the pain in the ass that comes with people trespassing on his land, all that stuff. It's doing nothing. That land is just there doing literally nothing, when it could be bought by developers and they could build houses on it, and they can increase the supply of housing. And they can basically extract wealth out of the housing market. They can give that housing to people who need it. And this guy can get away with his Bitcoin. Like today, I don't know how much Bitcoin. I think he could probably get like 1,000 Bitcoin for all of that land. Maybe a little bit less. I don't know what the exact number is. But eventually it's going to drop to 100. And it's going to drop to 10. And it's going to drop to 1. Because it's a competition. The people who own this land, there's a lot of people who own massive amounts of land, right? At some point, they're not even going to be able to get 10 Bitcoin for it, because the land is abundant. Like there's no scarcity of land. Like if this guy's holding that much land and he's doing nothing with it, there's no scarcity of land. They're literally just holding it as a store of value. I think that value is going to be transferred into Bitcoin. And I think that these numbers are way too conservative. I think it's actually dangerous to think that it'll stay this low, because it makes people think that, oh, I have time.
Yeah, I don't think people have time. Like this will
that's
keep.
That's what I'm saying.
Away.
It makes people, like if we say it's going to have 25% returns, Bitcoin's going to be 150K next year. Don't worry. You can go and increase your income by 25%, more than 25%. You'll be fine. Don't even worry about buying. That's how people think. I'm not saying that you're saying that. I'm just saying that's how people start thinking, right? They start getting too confident. They start thinking, oh yeah, Bitcoin's never going to run away from me, and it's going to come back down 70%. But this is a finite asset. That's the thing that people need to grasp.
Exactly. And my expectations are very different from reality and the math of reality. The math and reality come first. As bearish as I might be, this is like a win-win for me, because when I'm wrong on bearish targets, it means I just got wealthier.
It's like you under promise and over deliver, basically.
Exactly. That's the mindset that I typically carry.
That's the greatest way to
think about Bitcoin. Yeah.
That's the greatest way to think of it if you have Bitcoin. That's because if you have Bitcoin, then you're not going to sell it if you think that way. But if you don't have Bitcoin, I think that's the worst way to think. Because
Definitely.
the reason why I say that is because it makes you think that, oh, I have time. I can wait. I don't have to worry about buying Bitcoin immediately. I don't have to sell my rental property because today it's worth 10 Bitcoin. Tomorrow it'll be worth, or next year it'll be worth 9 Bitcoin. The following year it'll be worth 8 Bitcoin. But no, that's not what's gonna happen. Your rental property today is worth 10 Bitcoin. In 4 years, it's going to be worth 1 Bitcoin. Then in 4 years, it's going to be worth 0.1 Bitcoin. And you're not going to be able to reverse that.
And remember, there's always a massive like catalyst ahead, like at the nation state level that we have not even seen yet. We've not seen any country that has surplus dollars when they do trade with America to suddenly start holding it in Bitcoin instead of treasuries. We've not seen that yet. Someday that's going to happen. Someday some country is going to start saving in Bitcoin instead of treasuries.
Yeah.
That is a massive catalyst.
They're not going to want STRF. They're not going to want STRF.
No.
They're going to want actual Bitcoin in cold storage.
Correct.
No counterparty risk. Yeah.
No counterparty risk. They're not going to want Caspa. They're not going to want Ethereum. They're not going to want XRP.
Yeah,
they're going to want
XRP.
Bitcoin.
Like this hasn't been modeled in anybody's. I mean, Sailor's probably expecting this someday, but nobody talks about this at the nation state level. Everyone trades, right? And everyone is forced to hold treasuries with their dollars. Mm-hmm. I definitely think that can change one day into Bitcoin.
Yeah, I mean, it just makes sense for it to change. The assets that are controlled, like what happened to Russia with their U.S. assets that were frozen, right? Just like that should be a huge wake up call for nations. Mm-hmm. Like, why would they hold something with that amount of counterparty risk? And it's not even something that performs well. It's just something that has low volatility. So they, and low volatility and high liquidity, if it's like treasury bonds.
And secretly holding Bitcoin is very different from demanding Bitcoin. Like, yes, Russia could secretly be holding it all in Bitcoin, but they've yet to demand Bitcoin for oil or natural gas. That's a whole another catalyst and game that hasn't even begun yet.
Yeah. Something that I don't know if you guys watched. There was a podcast with Gary. What's his name? Gary Cardone. Gary Cardone. Yeah. Mm-hmm. So he was talking about how right now the price of energy is way too low. We leave our computers on all night. We don't turn off our phones. So the cost of energy is way too low, right? Because we just waste energy on things that who's using it? Why do you? I leave my computer on overnight because I just don't want to shut. I don't want to shut it off.
I think everybody does,
right? So the price of energy is way too low, and what he was saying is, at some point, what if these countries start saying that we're not going to sell you oil, we're going to sell it to the Bitcoin network. We're going to use it to mine Bitcoin because we can get a better long-term reward.
Excess energy, right?
Right. Yeah. So like all the excess energy that they have, instead of selling it to the US, instead of selling it to all these other countries around the world, they start selling it to the Bitcoin network. And the only way that you can get that oil from them is by buying it with Bitcoin. That changes everything. Like that, and that can happen pretty quickly.
Yeah, we've not seen that yet.
If one country starts doing it, then every country is going to have to do it. Mm-hmm. Because that's an arbitrage opportunity. You can, like, the US can go and buy Bitcoin from a country with fake paper dollars and then sell it for Bitcoin.
Exactly. They're already playing those games with oil, I believe, countries. Like I think they buy cheaply from Russia.
Oh yeah.
I don't know. I'm not too into geopolitics, but I'm sure people buy cheaply from Russia and they sell it somewhere else.
Yeah, why wouldn't they? It's an arbitrage opportunity. It's a way for them to make free money.
Yeah. And Bitcoin hasn't entered that picture yet in energy, in a national scale like that.
One thing that I've seen is as a little bit of a signal is Pakistan has started talking about acquiring Bitcoin in different ways, and they have a massive deal with the IMF, and they said we're going to use our excess electricity to mine Bitcoin, and the IMF is trying to stop them from doing that, which is crazy because they should be a sovereign nation, be able to use excess energy however they want. That's literally wasted energy. And the IMF has a very clear reason in my mind of why they would want a nation not to do that, because Bitcoin is a real threat to them as as a monetary fund. But it's only a matter of time before other nations that don't have the boot of the IMF on them of doing that with their excess energy. Like, why would you not do that?
Yeah, and I think nation states are so behind, in my opinion, because everyone's still positioning themselves around gold. Every country publicly.
Yeah. True.
So I think they're going to try the gold thing again and fail again, and then someone's going to realize, okay, we jumped to Bitcoin and like try to posture around Bitcoin instead of gold. And you can see it everywhere. All they do is talk about BRICS and gold, which is obviously going to fail. And these countries aren't going to go anywhere until someone would just makes the move to Bitcoin.
Yeah. Do you guys want to answer some of these questions? Should we get to some of these?
Yeah, definitely. Sure.
Okay, let's do it. First one here. Your opinion: Will Bitcoin go back below 100K? What do you guys think?
Someone just asked me that, I think yesterday. I mean, it could.
Yeah.
But in my opinion, I mean, let's see. We had an almost 30% drawdown the last time where we went to 75, right?
Mm-hmm.
That was about 30. If that were to happen again, we would just be right under 100 again. It's possible.
Yeah, there's nothing really special about 100K. I mean, there's some resistance, and there's it is a round number, and there can be some trading around that and stuff, right? But yeah, Bitcoin's a volatile asset. Like it could easily, and historically has had way larger drawdowns than we've seen this cycle. So
yeah, and you said something important. Like 100K, there's nothing special about it now. It was the first time we hit it was special, but now that's just a number now. That special factor is gone, in my opinion.
Yeah. Let's see. What other questions? Can you guys see the questions too? Is there anything there that you want to talk about?
How is the change given for an item that in the future costs less than 1 Satoshi? On Lightning, there is already fractional Satoshis.
We even saw that change on mempool, right?
Yeah.
Being able to use smaller fees than 1 Satoshi. It's fractionalized. It doesn't actually exist in the Bitcoin network. Like the Satoshi is the unit, but it could easily exist with a pretty simple soft fork, as far as I understand. We could devise it even smaller if need be.
But that's like asking, like, give me $1.005. That's not even relevant, right? You cannot get change less than cents today.
Yeah. But because it's programmable money, we could in the future.
But we're assuming here that
once you're on sats, like that is small enough that it would satisfy in the same way that cents satisfy today.
No, but I think the way that I understand this is that at some point Satoshis are going to be worth so much that
that they require a small breakdown of
even smaller, because they're worth so much. Yeah.
Yeah, well, it would be certainly easier than dealing with that right now with dollars and coins.
Yeah,
that's for sure.
Yeah, exactly. Oh, I just wanted to address this real quick. Ted Lee, our Maple Bitcoin Happy Hour starts next week. That's on our school. We're not doing one today. We're starting that next week for the first time. Just wanted to.
So we're going to be. Can you just explain what that is?
Sure. Yeah. So the happy hour is an additional hour of live that Rajat Jor and I are going to do on the school, and it's done through Zoom, so people can actually join the call, not just through chat, but can actually voice their questions, be audio, video, and be a part of the call. And that's exclusive for members of our school community, which we've already linked. And if anybody's watching this on the replay, we will link as well in the comment section and the description.
Yeah.
All right.
Okay. The next question there from what are your thoughts from Naughty Vlogs? What are your thoughts on the whale from 2011? I don't really care. I mean, if they sell, they sell. The good thing here is that if you sell your Bitcoin, you can't sell it again.
It's
Once
just
your Bitcoin,
distribution, right? It's just
yeah,
being
Yeah.
redistributed
Simple
to new
distribution.
holders.
yeah,
If somebody is selling their Bitcoin, they're not a they don't have the conviction in this current moment, and they're likely going to sell it to somebody else that, well, they are selling it to somebody else that's going to hold it for longer than they are into the future. So that's just the nature of markets.
Yeah, I don't think anybody even thinks about it. Like people
yeah.
buying Nvidia today aren't thinking about and looking at why the CEO just dumped 100 million in shares. Who
Yeah,
cares?
I think Jeff Bezos dumped like $5 billion worth of
Yeah,
Amazon
these
stock.
these OGs keep selling every single week almost.
Yeah, and
But who
where
cares?
else is
Like
the Bitcoin
AI
going to come
is
from?
the future. where AI is going. It doesn't matter.
Yeah.
Yeah,
Nvidia is still going to keep going, right? Nobody cares what they're doing, what the OGs are
yeah.
doing with their shares.
This is like thinking that because Jeff Bezos. So I think a lot of people actually. I'm not saying anything against Naughty Blog, nothing like that. But I think this is something that actually people have in their minds, and they think that, oh, if the old holders are selling, then I shouldn't buy either. No,
Yeah.
that's not. Think of it logically. They're
Mhm.
selling because they bought at like 10 cents, a dollar. Even this guy, 78 cents. Now they have $100,000 per 78-cent cluster of Bitcoin that they bought. Right. So how many coins do you think they have? Maybe they have 10,000 Bitcoin. They have $1 billion. $1 billion. So if they sell 50,000 Bitcoin, they get, what is that? Five? No. Um, if they sell 500 Bitcoin and they get, how much is that worth? $5 million. 500 million? No, $50 million. They get
Mhm.
$50 million out of it. They pay off their mortgage. They pay off all their debts. It doesn't affect you, but they get the benefit out of that. So it doesn't really matter if they sell their Bitcoin. It's going to happen. They have to. That's this is one of the things about money that people don't quite seem to understand. You don't just stare at your money. It's not just gonna. The value of money isn't in how much you have. It's what you do with it. So maybe this person went and bought a mansion after waiting for 14 years. Good, good, good. They should do that. They deserve it,
Yeah.
right? They deserve it. If they held
Absolutely.
for 14 years, they deserve it. I have nothing against that. I'm perfectly happy with that. It just means that more people can buy. If they didn't do that, maybe Bitcoin's price would be another $10,000 higher, right? Think of it that way. You benefit from them selling.
Yeah, and that's I mean that's the one real thought around this that you could have is that it is selling pressure into the market, and that's going to affect the price while that's happening. That's a good thing if you want to acquire more. It's a bad thing if you, for some reason, want the price to go way up in the present. And really, that's like the only thing that you should really be thinking about. And really, again, that doesn't really matter either, right? We all know where this is going. We just looked at a spreadsheet and all said conservatively by 2040, it's going to whatever it was, 1.8 million or 3 million or whatever, like super conservatively. So again, it's not really that big of a concern that whales are selling.
Yeah.
Here's a question here by WorkSave Bitcoin, Josh. For my situation, I'm taking a short-term bet on my long-term success by leaving my 9-to-5 job to build a business. Is this a strategy? He's talking about the borrowing to buy Bitcoin. Is this a strategy I could use to help me not have to sell any / much Bitcoin while I build?
I think that's a smart idea. But the only thing is that, let's say you have no cash flow for a few years. Like for me, for example, um, I started making content on social media in May of 2021. It took me 4 years to finally start making money. The first year and a half, I made no money. Right. So if you're let's say you're leaving your 9-to-5 job, and you have no other source of income, and your business doesn't take off for 4 years. And keep in mind, most businesses fail. Most businesses
Right.
fail. You have to remember that 90% of businesses fail. Even for me, I started multiple things. I tried Instagram, for example. I didn't like it. I would consider that a failure, right? I didn't continue doing it. I didn't like the way that I would make money on that, so I consider that a failure. I started. What else? I did a couple of different things, but I didn't continue with them. So my
Mhm.
point here is that your business may not, you might believe in yourself. You may want to put all the chips on the table and bet on yourself. But you have to understand that your business may not succeed. So you have to find a way to continue paying back that Bitcoin, that loan that you take on. If Bitcoin's price falls and your Bitcoin hasn't succeeded in that time, you could lose your Bitcoin. What I did was For 2 years, I was driving Uber. I was doing Uber Eats while I was doing whatever I could to build my content business. For 2 years, I was doing Uber Eats while at the same time creating content. So in the beginning, you leave your 9 to 5, and it'll be a lot harder, but over time, you're going to see the rewards. What I would say is, instead of borrowing against your Bitcoin, because if you have no income, then you're going to put yourself in trouble. What I would say is, find some way to generate some cash flow immediately instead. So if you can do Uber a couple hours a day, it's going to make you 50, $60 a day, 20, 30, whatever the amount is, $40, $50 a day. Do that. I would rather do that over, uh, or if you want to borrow money against your Bitcoin, do that plus pay back your loan through that Uber income that you make. But the issue here is, again, let's say something happens to you. You get into an accident and you can no longer drive. How are you going to pay back that loan? What if you can't continue making your YouTube videos? I would say that if you're leaving your job and you're borrowing money, you're taking on way too much leverage, and I personally wouldn't do that.
Yeah, this comes back to what we talked about of having a steady steady income as being sort of the backstop for the worst case scenario with taking on a loan to buy Bitcoin. Right, everything's good if you've timed it right. You've bought Bitcoin at the low with a loan. You could sell some of that Bitcoin to pay the loan in full. You could do whatever, right? You're just basically fine in that situation. But if everything goes against you and you don't have income to service that loan, you could end up with less Bitcoin from taking on leverage. If everything goes against you, or if a few things go against you. So it's additional risk. That's what leverage always is additional risk, additional reward, additional risk. But I think, what Rajat said there, if you can service your loan by acquiring some capital, if you feel stable enough, maybe you could do this. Maybe you could do this on some sort of scale that isn't putting you at a huge amount of risk. Maybe, I don't know.
Sunny, your thoughts?
Yeah, I mean, I think you guys perfectly answered this question. And anytime you talk debt, you have to also talk income. You have to, and so risking that income side of the equation, I think it's always a bad idea.
Yeah. All right. Let's see. Here's an interesting one. By Naughty Vlog.
We got a super chat.
Oh yeah. Let's hit that. Right.
Yeah.
Red Flare 1. Thanks for the $2 super chat. Should I get a Coldcard Q over Ellipal Titan 2.0? I'm actually not sure. I don't know. I'm not familiar with that Ellipal.
I've not
Titan.
heard of that either.
I've heard really good things about Coldcard.
I use a Coldcard myself. It is world class. There's no better experience than Coldcard with SPARROW. No better experience.
I 100% agree. Coldcard Q is great. It's a great wallet. Great hardware wallet. The full keyboard makes it so that it's really easy to put passphrases in. There's so many advanced features within that thing. Incredible hardware wallet. Unfamiliar with the other one, so can't really talk too much about it, but maybe that's part of potentially some of the downside. I mean, maybe there's a reason it's not super well known. I don't know. And Carlin, another $2 here. Appreciate the super sticker. No question with that one.
Amazing.
All right.
Okay. Let's go into that question that you mentioned.
Yeah. Do you think that the U.S. government would ever make a property tax on owning Bitcoin? I think this is kind of interesting because if you hold it in self-storage, how would they enforce that? Right?
Yeah. First, they need to inventory all asset that is taxable. And it's so easy on real estate because that's like a state enclosed asset, right? Every county treasurer has to record when you buy and sell. So they know about every single plot of land and house built on top. Easily taxable.
Yeah.
But with Bitcoin, nobody knows what's in cold storage outside of exchanges. There's just no way. This wouldn't be efficient at all as a tax strategy.
Do you think maybe then that would just push everybody to self-custody? I was just thinking in my head, maybe there would be a way for them to try to tax like ETF, like Bitcoin and ETFs or something like that, just because it's easier for them to track. But just thinking out loud here, it would incentivize everybody to move to self-custody, which would probably go against a lot of their other interests as well. The government's, that is.
I mean, at some point, okay, so the way that I see it, let's actually see how this would play out. I think that because people who are in the government they're still selfish, right? They're still thinking about themselves. They're going to want to own Bitcoin. They know it's the best asset in the world. If they talk about a property, the people who would talk about a property tax are the ones who don't own it, because I think it wouldn't really make any sense for people who own it to want to introduce a property tax on Bitcoin. So that's one thing. And then the people who don't own it, they probably don't understand it, because how are you going to force somebody to pay a property tax? They can just move their Bitcoin somewhere else. They can leave. It'll probably lead to a massive outflow of capital. So brain drain, capital outflow. I think that would be terrible for the economy. So I think if they play out what would happen if they were to start a property tax, I mean, I think it would be extremely negative.
Yeah, there's no cornering Bitcoin from a government standpoint. Like, the US has already classified it as a commodity, first of all, not property, which means they would need to go back and undo that. And I mean, it's just far harder to do than to just enact a tax on it.
Yeah. And then if somebody has non-KYC Bitcoin, they can't even track it. Like you guys said before, there's no way to index all those assets. You can't have a record of all of them. It's impossible.
Yeah, it's not tied to people's SSN and stuff, so it's near impossible.
Yeah.
And Forrest, WorkSave Bitcoin.
Has a follow-up here?
Yeah, a follow-up. Let's talk about that one.
Yeah, my income is building through various streams. I was talking more about moderate risk by keeping a fraction of my expenses on a 0% interest credit cards. I mean, if you can get 0% interest and you're using that capital that you've taken out from the debt to produce income or invest in an asset that's increasing at more than a 0%, then you're better off for it.
Yeah, these are new details now by this user. Yeah. And I mean, that sounds like it's okay. It's just a fraction of its expenses. Yeah. And if you have the ability to get those 0% deals, I say go for it.
I think that would be smart. Yeah. I think that would work out really well, because first of all, you're using this asset that's going to increase in value over time. And I've watched your videos, man. Like you understand how Bitcoin works. So you're not like, if Bitcoin drops 70%, I don't personally think that you're going to sell. Having Bitcoin on your treasury, whether it's personal or a business, I think regardless, it's a good thing. So I think you'd be better off. I would say maybe don't borrow against your Bitcoin if you don't have any income. If you have some, like you said, my income is building through various streams. It's great. But again, your income streams could disappear. Like if Bitcoin goes, let's say you have a Bitcoin based business and Bitcoin goes through a bear market, a lot of people are going to, let's say you have your YouTube channel, you're making money from there. If Bitcoin goes through a bear market, a lot of people who are watching YouTube videos about Bitcoin today aren't going to watch them. So your income is going to drop massively. You have to account for that, right? So your Bitcoin value is going to decrease and your income is going to decrease. So you have to get through it during a bear market. That's the key here.
Yeah, fully agree.
Yeah, absolutely. All right. There's what about this one? Thoughts on buying Bitcoin with buy now, pay later? You guys have thoughts on that? I'm not too familiar with buy now, pay later.
Usually the interest rates are really high.
Are they?
From what I know.
And the terms are really short usually. It's like they like let you split it like in 3 payments or 4 payments or 6. So it's really not that long. Okay. And the shorter you go with Bitcoin, the higher risk it is. So I think it's a bad idea.
If you keep the loan after that, I think you can actually get charged a lot of money. Like your interest rate is going to be super high from what I know.
And not just that, like it's almost impossible to use one of these to buy Bitcoin because these are like closed platform loans. Like it only works like on a website or like at IKEA or like brands, right? It's not, they're not giving you cash. Yeah. It's just a way to pay at checkout.
Yeah.
Right.
Oh yeah,
that's near impossible.
Yeah.
So you'd have to do something like you're using your expenses through a buy now pay later system, and then the cash that you've saved from not having bought in something, you would have to buy Bitcoin with that. Would
Yeah,
be
you have to
maybe the way
go
around
super
it.
roundabout like that.
Yeah. Yeah. Doesn't sound like
I
the
don't
best
think
option.
it's worth time or the effort, really.
Yeah. This is kind of an interesting one. It's a little bit different. Looking to do personal fixed income instrument with family members and friends. Example, they get 3% on crap money market. I buy Bitcoin with that, offer 4% simple interest for 5 years plus 10% on gains. Yeah, what are you guys' thoughts on creating some sort of instrument and using family members and friends' capital to create something like this?
I would ask you if if you want your family and friends to do well, they're your family and friends. Why wouldn't you offer them a higher interest rate? I mean, if they're okay with 4%, they're being taken advantage of. The way that I would see it, if I got into a deal like this, I'd want to offer something like 10%.
It's kind of like you're creating like a hedge fund, like a family and friends hedge fund, right? And
Yeah.
so they're getting the 10% gains, and if you're just buying Bitcoin with it, and then you're just paying 4% interest, and you're kind of using that capital as a loan, plus the cost of the gains that you have to spit back to them. I
And a
don't know.
lot of things could go
Yeah,
wrong, right? Like if
yeah,
let's say you borrow money from your grandma, she
A lot
gives
of
you
things can
money,
go wrong. Yeah.
she
yeah.
needs that money, um, and she you tell her 5 years, but it's your family. You're not going to be like, oh no, you have to stick to the terms. What if she's like, oh, I need the money today. I'm so sorry. I need to pay for this. I need to pay
Yeah.
for that.
What if you have to immediately liquidate
Yeah.
Right.
when you're down or in a bear market? Like, how are you paying the interest? You
It
cannot
sounds
print
very
money.
smart in theory. In
Yeah.
theory, it sounds very, very smart, but things don't go as planned. They never go as planned. Like the way that I see it, when I buy Bitcoin, I'm expecting to be wrong for the next 4 years. I
Yeah. You would have
expect
to
that.
like lock in and ensure nobody can liquidate for 5 years or
Yes,
longer.
that's the key. And
That's the
Yeah.
then
key.
on top of that, the money market funds, the reason why they're so low in interest is because of the liquidity that they provide you with.
Yeah.
That liquidity is key. You're not gonna maybe you can find somebody in your family who's willing to give you your money at 4%. But I would feel bad, to be honest. I would feel like, okay, I'm screwing this person over. I'm gonna get wealthy, and then by the time I get wealthy, they're gonna have a 4% growth. Maybe offer them more and say, yeah, you need to lock it in. Or I don't think that this is the best way to do it. If you mix family and money, it gets really, really difficult.
I
Yeah.
think that's the biggest risk
Most
right
of the
there.
times it doesn't work out.
Yeah.
Yeah.
Yeah, in my opinion, yeah, that family members slash friends part of this question is the biggest risk to me, and it's not worth it. Like we've been talking about character loans through with credit cards and with banks. It's like, yeah, it would suck if something goes wrong with that, bankruptcy or whatever, right? Any of these problems, but those relationships are with credit card companies and banks. It's not with your
Institutions.
family members and friends that you could irreparably, damage these relationships that you have. To me, I mean, people have done this before, stuff like this, and they've been successful and it's been fine. But it's definitely a huge risk, in my opinion.
I think if you want to do something like this, I think you should share the wealth with everybody. Like that wealth, everybody should know what's being invested in. Maybe you take a cut out of it, but tell them that, hey, this is what's happening. This is what could happen. It could be very volatile. Help them to understand what it is. I get your point. They have their 3% in the money market funds. The way that I see it, I think it's I think it's smart to tell them that you can get a higher return. Who knows? What if they actually want to buy Bitcoin themselves?
Hmm. Yeah, and I think you'd have to really create like a legal framework for this to work with like the locked in, right?
Yeah.
Which is a totally different investment than what they're doing with money markets. As Rajat said, the reason people are in money markets is because they can easily liquidate that. They can get the cash. They can go buy something else with it, different investment or whatever. And it would be ideal not to have that same sort of um, system with what you're doing, right? You would want something that's locked up, and therefore there's going to be a premium that you're paying for that. you've laid out a premium there, but I would just say, it's much different having a liquid asset than an illiquid asset. And you should probably have that factored into what you're rewarding people for investing in.
Oh, he mentioned at the end. Sorry, I didn't even see that. He said plus 10% on gains.
Oh,
I
okay.
think he did account for that, I guess. But even 10% on gains, I mean, that's you're not taking all the risk though, right? They're taking the risk. This is almost like going back to a bank where they tell you that they're going to give you a stable S&P 500 fund and then they charge you a 2% fee. Like I've actually seen that happen. So there's these funds in Canada that are offered through various companies where they say we're going to give you a low volatility S&P 500 fund. So you don't have to deal with the volatility, but then you have to pay that fund manager 2% in fees. So you might as well just take on the volatility, right? In this case, like I would personally feel better if I told my family to buy Bitcoin themselves instead of taking their money and buying it for them, or buying it for myself and then giving them the small returns. Or I mean, I guess it depends on what your family situation is like as well. Like somebody commented here, don't avoid anybody in business, no partners. So I don't really agree with that, but avoid family in business, especially if it's family. What if they want out quicker? Are you going to say no?
Yeah, exactly. It's with this complicated structure, it makes it challenging.
Yeah.
I don't know if it's worth it. And I think the reason somebody would want to create a fund like that is so that, you're giving 10% plus the 4%, right? But they're able to treat this as like a business or a job where they're able to make money by offering that. But like Rajat said, if you could just tell them, hey, buy Bitcoin instead, like that's probably what you're going to do in that fund. If what I would probably do with that fund is I would put it in Bitcoin, right? And it doesn't really take 4% plus 10% of the gains to just buy Bitcoin. Like that's much simpler than that.
Yeah.
Is there anything else you guys want to get to? I mean, we're already an hour 20 into the show here, so I don't know if we want to wrap
One
up
from
or.
Chris Funkton. I thought that was pretty great. How about if you're planning to DCA?
How about if you're planning to DCA?
How much time do you guys have? Do you guys have some time?
I've got time. I've got 30 minutes more max. That's
yeah.
about
Okay.
It.
Okay.
All right. So I cannot find that question.
It's you started already.
Oh, I did. Okay.
It's the second one.
Okay, got it. How about if you're planning to DCA, say $400 per month, and you've got the chance to leverage your home and have $400 per month repayments? This could be paid back over 25 years. The leverage would only be about 10 to 15% of the property value. So basically a HELOC where you're planning to DCA. Yeah, what are your guys' thoughts on this one here?
I think in theory it would work, but you're kind of putting your family at risk, right? What if you can't pay it back? What if you lose your job and you can't pay that $400 per month? What if something happens where, for whatever reason, your bank wants to get that money back ASAP? And I mean, I don't know if they will. I'm not saying that they will. I'm saying the chance is there. What if they say you can't borrow this money anymore? You need to pay us back ASAP, or we're going to take your house. Like, you can't stop them from doing that. That's what makes this a little bit difficult for me. In theory, it would work. I think that this would be a great idea because if you get a HELOC, you could probably get a low interest rate. What are the HELOC interest rates right now? 7%, 8%? Maybe
They're
more?
between like 7 and 10 from what I've seen. Yeah.
I think 7 to 10% interest rates are great.
Yeah.
In theory, but if you see, that's one of the problems though. If something happens where you can't pay it back, or you can go homeless, you have to consider that.
Yeah, and in theory, 25 years is amazing to hold Bitcoin, obviously, but yeah, that's with the HELOCs, it's still the same risk. Like,
yeah,
you've got counterparties now, and yeah,
like that counterparty risk is kind of scary to me. And you need to make sure that Bitcoin grows at more than 7% for it to be worth it for you. I mean, I think it will, but if there's let's say there's a period of 8 years where it just moves sideways, and you're still paying back your $400 per month.
Yeah. So let me just add, a lot of people that do take HELOCs, they set aside a part of that HELOC as the monthly payment, actually.
Yeah.
Oh, that's smart.
They're not buying the whole thing, right?
Right. Oh,
you
that's
set
smart.
aside like, however
like
monthly it is,
yeah,
out of your HELOC total.
Yeah, like a year's worth of
lock
payments
in. Yeah,
or whatever. Yeah.
correct.
So
A lot of
will
people
that
do that. Like
Yeah.
the older folks do that because they obviously don't work and don't have an income, but they still
so
get
they
to borrow and use a portion of that borrowed money to make the payment itself.
so how much would you set aside for that? Probably not the whole amount, right?
It would
Probably not
make
the
no
whole
sense.
amount, but
It wouldn't make
depending
sense
on this
to make the
That
whole
person's,
wouldn't.
amount.
age or income situation.
So what about like 4 years worth?
Yeah, 4 to 5 years is pretty common.
400 times 4 times 12. So that'd be $20,000 that they'd have to set aside for interest payment. But
Would
then
be
they'd be
set aside.
covered. They'd be
You
covered
would
for 4
eliminate
years.
the payment
Oh,
risk.
that's actually a really smart idea. So I think
Correct.
that could work if you combine Sunny's strategy where you set aside some cash and you borrow, and then you make sure you leave that cash there. You don't go and buy Bitcoin with it. You don't take on more.
Yeah,
You already
strictly
have the
payment.
leverage. I think that could actually work really well.
It would work really well over 25 years for sure.
Yeah.
Yeah.
But if you're just you use the entire amount to buy Bitcoin, that's a different kind of situation because in that
Correct.
case,
Then you're like
you
me, you went all in. And
yes,
you shouldn't be going all in, right? You have to have some buffer.
yeah,
Yeah. And there's
that's key.
if you had to sell, like if you went all into Bitcoin and then you had to actually sell that asset to pay the monthly, there's going to be tax implications for that as well. So
Yep.
that might not make the most sense either.
Mhm.
Yeah, I mean, it depends on a few other things. It depends also, it was mentioned, but like if you're retired or if you still have income and you can use, post-tax money to pay those monthly repayments, like that's going to make a difference as well. There's a few different variables, I would say, within this strategy, but it can be done in a way where it makes a lot of sense, just like any
Mhm.
loan can, to buy Bitcoin.
Yeah.
All right. Let's see.
Somebody asked a question. I don't remember. I don't know who it was, but they basically said, if you borrow money against Bitcoin, what is the taxable event? Let's say if you use your Bitcoin as collateral, what would be the taxable event in that case? I think it would just be selling, no? Or if you get liquidated.
Yeah.
Only in liquidation or only when you sell is a taxable event.
Yeah. So even if you're sending your Bitcoin to a loan custodial wallet, that's still not deemed a taxable event. It's because it's for the purpose of acquiring a loan. So if you got liquidated, if you got margin called, they're selling that Bitcoin and returning that to you and paying off the loan. That's how a lot of those Bitcoin lending platforms work.
Yeah.
And that's a taxable event. Or if you were to say Bitcoin goes up a lot and you're to sell a portion of that to pay off the loan, that's a taxable event as well. So anytime that Bitcoin's being sold, that currently is a taxable event.
Yes. I think that's the simple. If you get liquidated, so let's say in this case, if you want more details on that, let's say, for example, if you get liquidated, you have a 50% loan to value. So you borrow against one Bitcoin, you borrow half a Bitcoin. The liquidation, from what I know, would be the LTV the LTV rises to 80%. So what that means is that your collateral would have fallen in value. So if you have a $50,000 loan, your Bitcoin would have to fall to 62,500 for you to be liquidated. So at 62,500, if Bitcoin falls to that price, it means that your lender is now worried that the collateral value may decrease too much and you may not be able to pay back that loan. So what they'll do is from what I know, I think what they'll do is they'll sell some of your Bitcoin. They'll bring you back down to a 70% LTV, and you have to pay the taxes on the capital gains on that the amount that had to be sold.
And
Yes.
generally, when you do get liquidated, there's a loss involved. So
Yes.
is there even a gain involved here? I don't think so,
No,
right?
but let's say you buy your Bitcoin at 10,000. Now it's
Yeah,
at
so
100K.
that comes into
In that
factor
case,
now. What was the cost basis of your Bitcoin when you took
that's
out?
key. Yes, that's the key.
Yes.
Yeah.
Yeah.
So if you buy it today and then it drops 50, actually maybe that's a way for you to harvest your tax losses.
Could be. Yeah, could be.
Amazing. I think that's a really useful question.
Yeah, for sure. I agree. Do you trust all your Bitcoin in one cold wallet? I've gotten this question a lot, actually. A lot of people think that once you reach a certain amount of Bitcoin, you're going to want to diversify your wallets beyond just like different addresses. I would say the one reason to do that is that there's a vendor risk but these are verifiably or open source code if you're getting a good hardware wallet like Coldcard. But you're also, I would say, you're also opening yourself up to like complexity risk by having more than one cold wallet as well. So there's sort of trade-offs, like there is with any cold storage setup. There's always going to be trade-offs. I don't know if you guys have anything else to add onto that question.
Agreed. Everything you said was great.
Mm-hmm.
I think that's it, right? You want to know about the trade-offs. You want to know about what the potential could be where you lose your Bitcoin. I think with something, see, that's one of the differences with something like Ellipal, like the one that was mentioned, Ellipal versus Coldcard. I think there are a lot more people looking at, even if Ellipal is open source, it's available to everybody. I think there's a lot more people looking at the Coldcard code to make sure that's working. So there's more eyes on it. There's more opinions. There's more thoughts on how it could go wrong. There's more ways to think about how it could go wrong. So I think having something that's more widely known wallet is probably a smart decision in this case, because that way you know that there are thousands or even millions of people looking at the code and making sure that there's nothing sketchy going on.
Yeah, like the more decentralized that it's been and the longer it's been out there, I feel like the safer it might be.
Yes. Agreed.
Yeah. All right.
Ooh, a great comment there. I'm waiting for mortgage rates to drop so I can refinance. I don't know what the context there is, but let's say you're waiting for mortgage rates to fall to buy Bitcoin. I think you're putting yourself in a difficult position, because if you're waiting for mortgage rates to fall, there are other people who are also waiting to do that, and they're going to buy Bitcoin with it, and the price of Bitcoin is going to be much higher. So let's say, for example, if you can borrow today at 7% or 8% and Bitcoin's price is 120K, interest rates go to zero. I mean, that's probably going to happen. I think that's probably going to happen at some point. If interest rates go to zero, there's no cost of borrowing money to buy Bitcoin. So what that means is that the price of Bitcoin could increase much, much faster than your interest rate is going to cost you, right? So if you could borrow at 7% to buy one Bitcoin versus 0% to buy one Bitcoin, what's the cost of that one Bitcoin going to be if rates go down to zero? If it costs you $500,000 to buy one Bitcoin at 0%, are you better off buying?
How are you better off? Exactly. It's the same thing with buying a house. People wait till rates drop.
Yeah.
But then when the rates drop, the house is already up $1 million.
Yeah.
Like I don't know how you got.
I think that there's a phrase: "Date the rate, marry the."
Yeah, whatever that real estate agents say.
Yeah. Yeah. So basically, what it is worry more about the price. Don't worry too much about the interest rate. I mean, if it's excessive, like if you're paying 40%, then obviously it makes a difference. But if you're borrowing at 7% and Bitcoin's at 120K, I don't know if it's smart to wait until it goes to zero. Because think about what happened last time when rates went to zero. Where did Bitcoin end up? It went from 3,000 all the way to like 60,000.
Yeah.
Yeah, I mean, Bitcoin has been performing so well in a environment of raising interest rates.
Well, he said, I'm not waiting. I'm DCing Bitcoin right now. That's great. That's smart.
Oh, excellent. Yeah.
Nice. Good call.
Amazing. I think it's important to just talk about like the topics that people say. I'm not even saying that you were saying that, Philip. It's just I think there's other people probably thinking the exact same thing.
Yeah.
Awesome. I think that was I think that was a great call. Oh, he has 2 million sats. Amazing. I think that was a great session.
Yeah, I agree.
Yeah.
Cool.
Any last things that you guys wanted to talk about?
No, not for me.
Not for me either. We covered a lot of my favorite topics, and I talk about this almost every day normally on my Twitter anyway. So good to do a live Q&A every now and then.
We covered a lot of topics there. I think we must have actually. Let me see how many thumbnails we have, or how many timestamps. 1, 2, 3, 4, 5, 6. So we covered like 20 topics in that call. I think that was great.
Oh wow,
great,
amazing,
that's crazy. Yeah, and yeah, this will be available on replay on. If everybody watching can actually go to the Maple Bitcoin YouTube channel. We're trying to grow that channel. That's where we post the majority of we post a lot of exclusive content on there. So if you guys can go there, if you're watching, that would be awesome. And again, follow Sunny on Twitter Twitter X. And yeah, thanks, Sonny, for being on the show. We really appreciate that.
No problem. Thanks for having me. It was a lot of fun.
Yeah, so just for anybody who wants to follow Sunny here, I'm going to post the account to
Yeah, I'm
have
going to do that too.
to join him. Also check out the school. The school is, I think, the key here. We've been working on that. We've been trying to create as much value there as we can. So let me just send you the link for that. I think it's school.com/maybe.
Oh, I got it. Yeah, I got it. I'll post it. Yeah, we're going to start doing these weekly exclusives on there as well. Live streams where people can join. So there's going to be a lot of value there. If there were so many questions that we didn't answer here, but you guys can definitely get your questions answered on the school live stream that start next week for the first time.
Yes. Awesome. Cool. I think that was great. Very useful talk. Thanks for joining, Sunny.
Yeah.
Thanks, Forrest.
Yep. Thanks again.
Absolutely.
All right.
All right, guys.
See everybody later.
Take it
Bye
easy.
for now.